high house prices, rising mortgage rates, rapidly increasing living costs and political turmoil. Could all of this lead to the demise of the UK property market in 2023? Now, I know what you're all thinking. Conor, come on, it's 2023 now. Those are all problems from last year. Well, my friends, if only that were the case. Just because the year has changed from 2022 to 2023 doesn't actually mean that much when it comes to the UK property market and all the headwinds it was and is facing. In fact, things could actually be about to get a lot worse. But before I dive into the video and why that may be the case, remember to hit that like button and of course subscribe to the channel if you have not done so already. 2023 is going to be a very interesting year for the UK property market, so make sure you subscribe to the channel and not miss an upload. Now, let's get into the video. If you have watched any of my previous property market videos, you will know that I am a massive believer in looking at and tracking the sentiment of the average Joe towards the property market. Mainly because it's the average person who will buy a home. So it just makes sense to track the sentiment of those who are buying the vast majority of properties. And luckily, we have a report that actually has tracked just this. Okay, so according to a report by the Building Societies Association, confidence in the property market is edging ever closer to rock bottom as buyers put plans on hold due to rising costs. According to this report, just 14% of survey respondents said they believe that now is a good time to buy property. This compares to 47% who reported they think it isn't a good time. This is one of the lowest levels of confidence the Building Society Association has actually seen since it began recording this data nearly 15 years ago. Now, as to be expected, the opinion on whether now is a good time to buy or not varies from region to region. For example, 19% of respondents in London believe now is a good time to buy. However, that number drops to 8% in Yorkshire and the Humber and 10% in the northeast. We also have some very interesting data on the number of individuals who believe property prices will fall in the next 12 months compared to last quarter. In September, 35% of respondents thought that property prices would fall. This has now increased to 49% believing property prices will fall. Oh, and before we go any further with the video, don't forget that you can get access to my free property investment calculator by signing up to my monthly newsletter in the link in the description. It's completely free to do, and it's the one that I use personally when I'm analysing property deals. So head down to the link in the description, become a subscriber to my monthly investor newsletter, and get access to that free property investment spreadsheet. And only 16% believe house prices will rise. This compares to 31% who thought it would rise just 3 months ago. The survey also highlighted that 9% of homeowners are now worried about the value of their home falling. Okay, so we now see that the sentiment of the average person towards the property market and its direction is changing. But what about interest rates? Because as we know, affordability is the biggest obstacle when it comes to buying a home. Well, the average 5-year fixed rate mortgage currently sits at 5.63%. This is actually down from a peak of 6.61%. But what do these interest rates look like when applied to a real mortgage? Well, if we take the average mortgage loan in the UK, which is about £200,000, and we put a 30-year mortgage term on it with a 5.63% interest rate, this would result in a monthly repayment of £1,150. This compares to a monthly repayment of £739 at a 2% interest rate, which in fact was widely available only a year ago. So you can clearly see just how much of an impact interest rates are having on the affordability of buyers. The exact same mortgage now costs £400 more than just a year ago. And this increase is just on the mortgage. Homeowners and buyers also have to factor in the increased cost of living, with everything from food to energy skyrocketing. Now, this brings me on to the question of, are rates going to go up or down in 2023? Well, in order to try and gain a better understanding of where they could go, we need to look at something called swap rates. What on earth are swap rates? Well, they are an agreement in which two counterparties, for example banks, agree to exchange a stream of future fixed interest payments for a stream of future variable payments based on a set amount. Basically, swap rates show what financial institutions think the future holds with regard to interest rates. And currently, 5-year swap rates are at around about 4%, suggesting that this is where financial institutions believe interest rates will be in 5 years' time. Now, this is not an exact science, of course, but it's a data point that is definitely worth considering. Now, if interest rates were to sit around 4%, that same £200,000 mortgage over a 30-year loan term would cost about £950. So still a big jump from where rates were, but slightly cheaper than where they are now. And every little helps. Okay, so pulling all of this information together, what do I think is going to happen to property prices? Well, with borrowing having become so much more expensive and the cost of living the way it is, I think there is only one way that property prices can realistically go, and that is unfortunately, or fortunately, down. How much do I think they will drop? Well, it's impossible to say exactly where property prices will go, of course. However, my personal opinion is that property prices are gonna fall around 10 to 12%. Now, I do not subscribe to the belief that property prices are gonna crash 30 to 50%, because I don't see a major financial catalyst that would cause this kind of a drop. For example, during the financial crisis, prices only fell 20%, and that was during a time of complete financial meltdown. So for prices to fall beyond that now, I think it would take some kind of black swan event. But hey, none of this is an exact science, and I, of course, could be wrong. Who knows? Property prices could fall 50% or they could continue rising. All that we can do as a community is look at the data that we are presented and try and use it to make an educated guess. Well guys, that is all from me. I really hope you found this video useful. If you did, remember to subscribe to the channel and of course like and share, and don't forget to head down to the link in the description where you can get your free copy of my personal property investment calculator template. Until next time,